This is Alan Bush with ADMIS. In the stock index futures, we are seeing lower prices this morning. Of course, the dominant influence in all of the financial markets is the escalating tensions in the Middle East, now especially with what is going on in Syria. So that very much a negative for stock index futures. In addition, we did have several recent economic reports coming in on the weak side. Last Friday, we had new home sales falling 13.4%. That was a very big miss. Yesterday, we had durable goods coming in down over 7% against the guess of down 4%. So those factors also putting pressure on stock index futures. Also, we continue to feel that the tapering now may be delayed. The consensus several weeks ago was that the Fed could taper at their September policy meeting. It now looks like they may wait until later this year, possibly even at the December meeting. We do feel that the tapering is a sell the rumor, buy the fact situation for stock index futures. So in advance of the actual announcement, stock indices are likely to work lower. Once we do get the tapering announcement, that could be a bottom. In fact, I think that will be the bottom near term for stock index futures. So between now and the tapering announcement, lower prices appear likely for stock index futures. Over in the currencies, some flight to quality buying coming into the US dollar index, although I have to say that the dollar is underperforming, basically not responding that well to bullish news when we do see it. However, the Australian dollar continues to come under some pressure. The latest weakness in the Aussie dollar now linked to the tensions in Syria. This has an effect of causing flight to quality flows to come into some of the safety vehicles, including the Swiss franc and to some degree the Japanese yen, but it does hurt the riskier currencies such as the Australian dollar, which is under pressure today. So look for more of the same, lower prices today and longer term for the Australian dollar. And in the credit markets, flight to quality is causing treasuries to advance. Also, some of the recent economic reports coming in on the weak side. Gains, though, limited by the U.S. consumer confidence report that did come out today, better than expected. Also, we do have a lot of supply this week. In fact, we have $98 billion in offerings, starting with today's Treasury offering. So even though we have seen a bounce off of recent lows, still feel that the main trend is lower for the Treasuries, especially for the 30-year. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.
That's his favorite class. She was at the football game last night. 25 and a quarter. UVA.